The Aegon Diversified Monthly Income Fund invests in global markets. We invest in a range of assets, equities, bonds, and alternatives. We only invest in liquid assets, so investors can get their money back as soon as, whenever they want it. We manage currencies as well, and importantly, we only buy assets that we want to own. So the investment process is built around the investment objectives, and the objectives are to deliver a 5% yield, a 7% total return over a 3 to 5 year period. Now, we make decisions on how much to have in equities, bonds, and alternatives based on a wide range of inputs that we get from research providers and other sources. Those decisions are made by myself, my co-portfolio manager. And we get a huge amount of support from all of our colleagues at Aegon. All of the securities that we own in the portfolio are also held in other Aegon specialist funds. And so that ensures that the client is always getting the best of Aegon at all times. In terms of buys and sells, those decisions we tend to be selling on the way up and trying to buy when things are cheap. So because we invest in a range of markets, equities, fixed income, alternatives, and we're essentially what's a long-only fund, so we tend to just own assets that we like, we have market risk. So we have market risk from our equities, market risk from our credit, market risks from our alternatives. And so that's the main risk that investors are exposed to. Now, by owning lots of different risks in those different assets across many different geographies, you diversify those risks, and that's the way that we deal with risk in the main. But there will be periods, and a recent example was the COVID pandemic in 2020, when markets fell sharply and everything falls together. So you can't always diversify all of the risks that you're exposed to, but that's how we manage risk. And when we have had those periods where the fund has had a drawdown and the price of the shares have fallen, investors generally have been well served by not selling their investment at that point. We've always recovered those drawdowns. And so at the very fundamental level, at the security level, we integrate ESG as part of our assessment of whether we want to own an investment or not, alongside all the other factors. Is the company a good business that can be successful and make profit? And is it also doing the right thing when it comes to ES and G characteristics? So that's how we integrate it. So all of the holdings that we have in the portfolio have had that type of ESG assessment as we look to invest in them. So we think of the Diversified Monthly Income Fund as being a core allocation for investors that they would have. Because it's a one-stop solution, it gives them exposure to all of these different markets, all of these different asset classes, and it has a what might be described as a medium risk objective. And typically our clients would own the Diversified Monthly Income Fund alongside perhaps some more risky funds, like an equity fund, and also alongside some less risky funds such as a fixed income fund.